Good afternoon, everyone, and welcome to the Daily Volatility Box report for December 27th, 2019. We are TOSindicators.com, home of the Volatility Box. In today's daily update, we'll take a look at all four of our index markets, so the S&P, the Dow, the Nasdaq, and the Russell, and show you how you can easily figure out the volatility of each of these markets in that first hour test, and how today you may have even been a little bit more aggressive and you can start to find more entries outside of the ones that we've defined in our trade plan for yourself if that fits your trade plan and trade aggressiveness level. So we'll start with the S&P, and typically in that first hour, we're checking to see whether or not we breach either side's aggressive volatility box entry lines. And that serves as information for us to then determine which of our two volatility boxes to choose, whether it's the aggressive or the conservative volatility box. In this case, however, now for a more aggressive trader, another way that you could start to look at this is we hit this level. You now see that we've started to turn from our RSI candles, and that first yellow candle is really what determines that second check mark in our triple check method, and gives you the slight bit of confirmation that, okay, we may be able to bounce up from this level and start to use this as a launching pad, right? And using that sort of a logic, you did not get the third check in this case, which would be signified through this pink arrow of the Wada indicator. However, you did get up to the second check, and this yellow candle is where you could start to look at potential entries. So that potential entry would have been at the close of this candle, where your stop is outside of this previous pivot point, right, which is right around 3.75, let's call it 4 points. And to me, for this to work as a sort of trade idea, I need at least a 1-to-1 risk to reward. So that means I'm looking for at least a 4-point follow through. And for that to make sense, I need to have at least 4 points above at least where the gray target line is, because that could be a general frame of reference. So we see that that's 7.45 points away. So we know that 4 points is within that allotable amount where we might expect that sort of follow through. So that would be the T1. And for me, that second target would still be that target line, which we didn't get to in this case. However, we still did make that first target and got a nice follow through of right around 5 points. And so I think that's that first trade. Now, if we take a look at this in the S&P and we'll contrast this with the other markets, we bounced from that cyan line, right? And we did get that follow through. But until the end of the day, we didn't really come close to that cyan line. Granted, it was a Friday, so we're not looking for new entries, but let's just use this as a purpose of experimentation and measurement across the boards. Now, if we come down to, let's say, the Dow next, we'll see that the Dow didn't get remotely close to breaching either side's cyan entry lines, letting us know that between the S&P and the Dow, the S&P is the more volatile of the markets, and we can see that kind of play out through the rest of the day with the price movement of the Dow being fairly in the middle of the volatility box with a slight dip towards the end, but again, it didn't fall as much as the S&P did. Now, however, if we come to the Nasdaq, we should see that the Nasdaq is the most volatile, which is what was making the S&P a little bit more volatile, right? So the S&P came only down to the cyan entry line and bounced, and that's because the S&P was less volatile than the Nasdaq, whereas the Nasdaq breached into our clouds before then starting to turn up. And if we talk about that same method that we just talked about earlier, this yellow candle becomes where you're looking at it as the first point of entry on the Nasdaq, at least if you're a bit more of an aggressive trader. Our stop is outside of the pivot point as opposed to the clouds now, since we have this information and we're buying on the way up, which is right around 14.75 points. Let's call it 15. And we're now going to see whether that 15 points is inside of that allotted area to that gray target line, which is 26.89 points. So 15 is less than 26. So it's a reasonable target, and that becomes our first target, letting us know that we might get that 15-point follow through. We very quickly do get that. And then our second target becomes this gray target line, which we fell one tick shy of, 1.25 tick in the NASDAQ futures. And so that's where you may want to consider front running, something of that sort, so that you don't miss out on something like this, to then have the NASDAQ come and stop you out at your break-even stop, right? Another way to play this move if you're not using the actual futures is to use either options on the futures, maybe the micro futures, or even the ETF equivalent, something like the QQQ, or even options on the Qs, whatever you prefer. But there's ample ways to play this that then start to define your risk, knowing that this is a more aggressive entry, right? So knowing that this is more aggressive than our traditional trade plan, you don't need to trade the full-size contract, especially if that's a little too risky for you. But instead, you could start to layer in using either the micro futures, maybe pick up some Q contracts, or even use the actual QQQ if you're looking for some of that commission-free trading. And finally, let's move on to the Russell. Now, in the case of the Russell, it should be fairly obvious that the Russell was the most volatile of all four markets, at least when we compare them side by side using the volatility box. We even got this likely trending down bubble, and this will sort of carry on into Monday's activity for us. We have this bias now in the Russell of likely trending down. And we can also see that towards the end of the day in the Russell, we did fall again, giving you enough of a follow through down to that cyan entry line. Not that you're looking for a new entry at 12:30 on a Friday, but it is nice to see these levels once again work out, even at this point, which only helps to build our confidence in these models and the levels and the trade plan that we have set forth for us. Hope everyone has a wonderful weekend, and we'll see you in the next daily update. Take care, everyone.